Hello everyone, Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino for your weekly stock sector overview to help you pinpoint some areas you might want to focus on in the coming week. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term subscriber, leave some comments and like the videos. We're trying to get to that 5K subscriber sooner rather than later, so let's keep growing the channel. All right. XLE still in long-term buy mode, coming back down to a key moving average area and still closing above it. So still, that's not the only signal, but that's one of the key areas we're watching. And by the way, the potential double, we've had a bounce in crude. Energy is still lagging a bit. By the way, this was an aggressive %B buy, so I am watching for a bottoming pattern down here, and we did not get the close below the 62.5. Now, if we start getting a weekly close below the 62.5, I will focus on the bigger pullback, and also remember we do have a massive potential double top in crude. And if that were to trigger, it would be all bets off for the time being for the energy sector. But right now, if there's any decent plays, they can still be played at least on a short-term basis because it is in bullish mode. XLRE real estate inside week, still in sell mode. So still in sell mode. Now can't really treat this as a proper double, I don't think. Let me just double check. It's always wise to double check. It's almost a horizontal channel, and actually we can. It just ekes into that double. This little rotation makes it a little sloppier, but you get a close below 40.27, 39.43, 39, and 39.58, focusing on the first two targets. And if that was the case, I'd look for shortable plays in the real estate sector. What would invalidate that is a little dip down and a rotation back up. If it does break out to the upside, you still have a gap left behind. Keep in mind, and that full gap fill would be to 42.17. And my major target, because we're still in a major downtrend, is about 42.61 to 42.70 with that rotation zone. That would just take us into a weekly rotation zone. I'd start watching for the bigger rollover play. Cycles getting to the top on the weekly and rolling over from the daily. So do keep that in mind. That is, any bullish play is very aggressive and very short-term lived. So I'm more focusing on a bearish play. XLF. The financial sector, remember, earnings start in financials this week, Thursday of this week. We got JP Morgan, we got Citi. So maybe I'll do another video on that. So these are still in long-term sell. Okay, I'm gonna put this up even with this double hitch as a potential double. It's still tradable on a weekly basis, but I'd need a weekly close above 32.87. A daily close would just be a potential run up to about 33.32 before the rollover play. Cycles are at the top on the daily and in the middle, trying to turn up, but even on a key area, you see this double here. The trigger point is right at the weekly rotation zone. So unless there's some blowout earnings moves, and I'm expecting actually the financial earnings to be a little worse than expected, and it'll be interesting to see the guidance. But even on a pop, this is more of a rollover play, so I'd be utilizing those levels. Anything higher, especially besides this double, there's almost this upward channel pattern. I'd be watching this upper end for a stall out move and then a rollover play. XLK, we have technology. Pretty strong reversal week, still in long-term sell. This does have a potential double here. So above this 134.20 on a closing basis. Then watch this minor area 135.25 in case it stalls out, but then it'd be the gap fill, and then the double targets are 138.88, and I would be focused on more so 141.15. So that would be aggressive play, especially with cycles on the top with the daily and on the top with the weekly after hitting the rotation zone area again. And why I'm saying even if this did trigger, there'd be short-term plays in technology only with where the cycles are. and because of just be a pop into the weekly rotation zone, and that's why I'd be focusing on the first and second targets. Also, remember, cycles are at the top on the broad market for both the daily and the weekly. That's not to saying nothing's confirmed a rollover move yet, but we are, or we should be prepared for any topping area. And so, since most of these sectors are in long-term sell mode, they can roll over pretty aggressively also. XLI. The industrial sector, very sloppy double, still in long-term sell. I am watching this with the little move up. That would get it out of the way of the daily rotation zone. Again, cycle's still trying to turn up there and trying to turn back up on the weekly, but I will not do anything unless we get the close above 90.20. And then I'll be focused on 92.61 and 94.20. You might be wondering why I'm talking about key levels if it does trigger, because against these key levels, I'm watching for any stocks that I'd be playing in the industrial sector. I'm watching these to tighten up these stops because we could get a rollover move in that whole sector, which means I don't want to leave a lot at risk for those stocks. But again, still in long-term sell mode. XLY. XLY consumer discretionary, still long-term sell mode. Trying to take out this weekly rotation zone. There's no key great area yet. You can see we came off a bit, again, a couple weeks ago off the harmonics. I'm just going to ratchet those down at this point. Looking at this daily, not going to get interested in it unless it can get above 150.41 with a broad market rally. If we do get above there, then my target would be the prior harmonic and this topping area about 155. And then above there, it would be to this 157.60, but not going to get aggressively looking at consumer discretionary, especially with daily cycles at the top and weekly cycles at the top against the weekly rotation zone. And you see that 25% level I was talking about right above here. That then we get through that, you can't ignore this 50 in the breakdown zone. That's why even above that 25% level, it's still iffy. Let's just see how this looks with the potential double. And this is not valid because the second and third targets go beyond the move that started it. So there is no potential double there. So it would just be a play up into this prior area I listed before. XLP, consumer staples, still holding up just barely. By the way, this still is a potential double bottom longer term, and you do have a potential double top. Will not start getting I will start, well, I should rephrase that. I will start getting a little more aggressive on some consumer staples that are at least good valuations or strong technical setups. We start getting above the 73.40 area. This it's almost a triple top with this move down, but I'm still watching it as a double top. And then if we get break above there, I'm watching the 74.15 for a stall up move, but if we get above there, I'm watching back to the 50% level. And then I get more bullish if we triggered this massive double bottom. If we come down, a close below 71.33, all hands off for me on consumer staples again. And keep in mind, it is a weekly rotation zone. That's why I'm not as worried about it to the upside because this is flattening out. So we have potential up and down plays in consumer staples depending on what triggers. So this is a sector I'm going to keep a very close eye on. And again, if it triggers to the bullish side, I have to have either consumer staples that have good valuations, or if they don't have good valuations, they have to have very strong technical setups or entry conditions. XLV healthcare. Healthcare, you see coming back down. This double is now off the table on the daily basis, and on a weekly basis, it's back in buy mode. Just barely back in buy mode. So we can, again, look for bullish plays on pullbacks in XLV coming out. Remember, it closed above the 62.5, just missing this 87.5, so going to be watching for one more push up. Your minor support coming in at 128.31, major support coming in at 126.37. We don't want to see a close below this 50% harmonic level, though. So I am keeping close eye with cycles at the top, but it is still playable if there's some healthcare plays, especially with weekly cycles still rising. So healthcare plays still are on the table. XLB, Material Select Spider, push lower. This is turning into a very weak sector. A very weak sector, but and this potential double is off the table now. So I'm really not interested in anything in XLB, the Material Select, until it can get a close above the daily rotation zone and this little ledge. That'd be 76.54. And those would only be for super aggressive plays only. Actually, it's better to start watching for rollover plays in the Material Select sector, especially, you know, it's been in sell mode now since the middle of June. Would not be surprised to get a bounce in here at some point, but a bounce play, you see here, a bounce play up to the end of the rotation zone, since it is pretty oversold on the weekly basis, would just be a bounce play with the cycles at the bottom, and then I'd be watching for another major rollover. So let me adjust this sort of. There might be some bounce plays if they are technical setups in here, but moment these weekly cycles start running back up and we start getting to the other end of that daily rotation zone, then I'm looking for rollover plays in that. XLC, remember we have been in long-term sell mode. We still do have this very, very sloppy double, but if this it's confirmed, if this does trigger, I will start looking for some plays in here. Cycles are at the top on the daily. Still not topping out at the weekly. And again, that would be watching for these plays into the weekly rotation zone because communication's still not overbought yet. So just coming off a short-term bottom before another rollover play, there might be some interesting communication setups, even though it's in long-term sell mode. About 58.92. 59.81 are the first and second major target I am focused on. And then at that point, it would be the 60.76. So if this does trigger on a closing basis, there could be some communication plays on a short-term basis to watch for. XLU, still in buy mode. But the pullback, again, XLU, utilities, very sensitive to interest rates, and we had interest rates rally again, bonds sold off. But I am watching for another push higher in bonds and another push lower in rates. Once that starts happening, I will be more interested in XLU. XLU, only way it's off the table is if it gets a close, potentially back below last week's low, would possibly shift it to sell mode, but not necessarily. If we start getting below 68.89, I'll watch for the bigger pullback and not watching for a real utility play. And still, again, until you watch the 10-year notes, the yields decrease, the notes actually rally. Remember, they have an inverse relationship, and I'd want utilities to get above about the 71.90 area again. XRT retail ETF still in long-term sell. Only plays still I'm looking for are valued plays on bounces up, stalling out against the rotation zone. But if we get a close above about 61.85, then I will watch for the potential bigger run up into the weekly rotation zone. And if I can find any retail plays that either have strong technical setups or good valuations, then those are on the table for a quick little run-up play. IYT, transportation, still have this potential double on the table. You see stalling out at the flattening out rotation zone. If it does start breaking above about 217.50, we'll start watching for potential front run plays in here, but I need it to really close above 222.54 to trigger that. Cycles are at the top and rolling over on the daily, but not yet on the weekly. And you have the weekly rotation zone in here. That's why on a daily basis, before I really get aggressive for any transportation plays, I need a close above there. DBC, long term, came back down, has not signaled a sell and a strong bounce off those levels. Watching for another potential pullback play and a stronger bottoming play with cycles turning up. And it's against that weekly rotation zone. You still have a key gap fill up here. Don't ignore this close first. You actually have a dual gap fill. So the first close is 26.64. The next one is 26.77. So those are going to be my target areas for any plays. We still have cycles moving up on the daily and getting to the bottom of the weekly. Now, cycles can still take a little bit longer on that weekly. That's why if we get this in another rollover, I'll watch for a stronger bottoming play back in commodities. I am being patient, but it is still in bullish mode. Agriculture, subset of that, finally completed that double and strong reversal. Still in sell mode. Okay, but I'm going to be watching, especially if it pulls back for a stronger bottoming pattern. Cycle's not yet on the top on the daily and at the bottom of the weekly, so we could see some more upside. So agriculture plays, if there's anything that stands out that you can use a safe stop level, because if this does pull back for a stronger bottom, you don't want to crowd stops on any agriculture plays, but I will start looking for that. Semiconductors. Remember, we're still in long-term sell for this system, and we're in long-term sell based off this massive double top area. We have the, there was a head and shoulders top. So we still have longer to go. I'm still expecting this to come back down with the 200 week. Could there be a little upside in here? Possibly a little more. Possibly. With cycles not at the top on the daily and still turning up on the weekly. But what I'm really watching for is if I can find any semiconductor plays that look good, I'd consider them on a short-term basis, especially if you start getting a close back above about 218. But then I'd start watching for the rollover play around 227 in the semis. You see we're coming off with some divergences down here also. So again, we could get a little more follow through to the upside before the next substantial rollover play. Now, we start breaking below. I'm actually bumping this level down to about 203. We start breaking down. Semiconductor plays are off the table, at least until we've filled this gap. Gold. Not much going on. Gonna be watching if it can break for the gold miners. If it can break above 2770 and we get some strength in gold, it might be viable for a short-term play in that, but then that would just be for a very short-term rollover play. VTV, Vanguard Value. Let's just check something out here. Value that is a potential double against long-term sells, so we have to use the conservative targets. So we get a close back above 135.97, 139.35, 140.105, 142.64. If this does trigger growth, then I'll get much more aggressive with growth stocks again. And you can see that it's against the daily rotation zone, but by the time that triggers, that will be out of the way. Front run pattern. This did trigger an aggressive buy back on the 6th of July, but I'm really watching for that key close below above 136. 135.97 is the exact level, but with round number, I'd watch for 136. Then I will start targeting, even though we're in sell mode longer term, I will start targeting this much more aggressively because even a rally back up here could trigger a long-term buy in value. Finally, growth. Let's just double check this. 210.94, the low here, or 219.94, the low here, 219.03. So that just squeaks in, it looks like. Oh, sorry. No, it doesn't squeak in. No, it doesn't. Let's just double check this again. 219.03, 219.94. Yes, it does. So we do have, now that worked out. Now this, So growth above 236.20 on a closing basis. You have this area, I'd really watch out with this gap fill in the 50, 238.15 if it stalls out there and rolls back over. But once that's clear, you have 244.50, 249.08 are the only two targets you can really use. So if that does trigger, that would just take us back into the weekly rotation zone coming off this 200 simple, and then I'd start watching for the massive rollover play in growth again because it still is in long-term sell mode, and that wouldn't take it close to long-term buy mode at all. And even if it did eke out the lower probability of the third target, since it's outside the move that created it, it would just be returning to the 50% for another rollover pattern. So that would only be I'd need a strong growth setup to take advantage of that in the individual stock, but that's what it looks like, especially if that does trigger. All right, that's where we stand for now. Hope this helps everybody. Let me know in the comments, and I will see everybody on the live streams this week. Again, thank you for tuning in. Have a fantastic day. Bye for now.